where I see the market heading to in the next couple of weeks or months. Just before I start, I'd just like to thank Bursa Malaysia Derivatives as well as Phillip Futures to organize such an eventful seminar, especially as we all can gather at our house to tune into this webinar is indeed a very, as we head into very interesting times ahead of us. Okay. So as usual, the disclaimer. So I think any information that's presented here today is purely on educational purpose, and any opinions or even views are purely based on my personal views. So do take it with a pinch of salt. Do seek for qualified investment advisors to really advise you further on how you should take your investment or your trading decisions. So I think it's just what Vincent highlighted. Today, I'm just going to be probably touching on the fundamentals aspect of trading FKLI and FCPO. Although as a trader, I do use a fair mix of fundamentals and technicals. And obviously, I think towards the second half of the webinar session, I'm just going to share with you some simple steps, some simple trading steps for you to navigate the market. I believe now it's very volatile time. If you just look at respective FKLI and FCPO, we can see very big range on a daily basis. And I think as a trader who are new to the market, is indeed a very opportune time for you to tap the market. Now, price seasonality is an important aspect. If you are trading commodities, especially palm oil, it is something that is a lot of traders look at, and you have to factor in seasonality because commodities as an asset class do display a certain sort of pattern on a certain monthly basis. I'm going to share with you and illustrate to you further as I go through the slides. And I'm just going to give you my view on where I see FKLI and FCPO for the second half, as we are now approaching the second half of the year. So let's see where price is going to go. Now, just before I start, I just want to give you a very brief background how the world economic situation is. The reason I want to give you a view is because as we try to trade FKLI, we need to have a bias. Obviously, if you are in the market, you have seen a very speedy recovery in the financial markets, both in the US markets as well as the Asian markets, especially including KLCI. So, but if you look at some of the fundamentals that's evolving around the economy, just to share with you, this is IMF projections on how economy growth outlook is going to go. This year is pretty much flat out. We're going to probably, although it's still quite mixed, if you ask me the situation about a month ago, when we're still facing the onslaught of the pandemic, situation might have changed from then on. So currently, I'm still seeing a bit of negative growth this year, but I think a lot of people are expecting recovery towards the end, towards the later part of this year, or in fact towards the first quarter of next year. Now, this can change anytime because you just look at the pandemic situation; it's getting very fluid. Anything can happen. Now there's talks of second wave that's coming to the picture, so we have to keep a tune on what is going to happen, especially on the pandemic front. As COVID-19 is going to bring havoc to some of the financial markets or even to some of the economic markets, you just have to pay close attention to the development in this front. Now, despite COVID-19, I think global is pretty much a global health crisis, and we have seen a global response in order to counter this COVID-19 crisis. And how does globally they respond? Major central banks across the world has actually pumped a lot of money into the system. They have done a lot of QE. If you just look at US, so I have these colorful charts here, the world map charts, just to indicate which countries are able to pump much more money. So if you just look at US, they are already pumping more than 2 or 3 trillion US dollars into the system. Same goes for Europe and some of the Asian countries as well. Include Malaysia-wise, we are taking a more fiscal stand. So each country will have a respective response to COVID-19. Now, this so far has been quite positive as a net result. But what is worrying is that as we print more money, especially in the Western economy, when you have more money into the system, the debt will keep piling up. Now, if you ask for my almost honest opinion, I believe that this debt eventually will get the hang of us. It's a matter of time. So right now we can feel the euphoria, but eventually as we go through time, whether the euphoria will last is something that is in everybody's question and in everybody's mind. So this is something that we're very cautious of. And obviously, I think majority of the central banks across the world has actually tried to pump up their own economy. Just I think a point case example, just look at Fed balance sheet. The funny thing is that if you just look at the global financial crisis, which we had in 2008, it cost the US government 700 billion to pump prime the economy. Now, if you look at the response by the US Federal Reserve this time around for the COVID-19 pandemic crisis, between 2 months, the Federal Reserve has just ballooned their balance sheet close to 6 trillion US dollars, which is additional $2 to $3 trillion. This is epic. We have not seen this before. It's definitely very expansionary. So I think market is taking this positive news in a very good way. Now, Jerome Powell, as a Federal Reserve Chairman, I think he has mentioned Federal Reserve will do whatever it takes. The keyword is whatever it takes to really pump prime the economy. So we are seeing the effect. You see the stock markets, Dow Jones, Nasdaq. I think especially in Nasdaq has pretty much hit an all-time high. So we have seen a recovery in the stock markets as a result of massive expansionary policy by Federal Reserve. Now, one of the things that's very concerning is that although we have seen coordinated effort to push the economy, especially in terms of printing money, if you just look at underlying economy, it is not telling you a very bright picture. In fact, you can see a very big disconnect between the stock market and the economy. If you just look at just economic numbers alone, we have seen rising debts, and we have seen companies filing for Chapter 11 bankruptcy protection. So big brands like Hertz, Aldo, Gold's Gym, JC Penney, these are some of the casualty of this COVID-19. And you'll be amazed if you just look at Hertz, one of the car rental company. You just look at the share price, it has actually went up past couple of days. I think the market is so infused with so much liquidity, they are pretty much chasing any type of stocks that's available in the market, despite the fundamentals, disregard of the fundamentals. So we have actually come to a very interesting time now. We have seen a total disconnection between the stock market and actually the economic fundamentals. Just to highlight again, I think clearly if you just look the ground numbers itself, the economic pictures is not that bright. We have seen rising debt, we have seen rising rate of default, and obviously I think one key takeaway, if you are really looking into, we must understand that this year is pretty much the US election year. And historically speaking, as we go through every US election year, stock markets tends to do well. So President Trump is due for election this coming November. If you just look at Bloomberg numbers, which is the chart on the right, it shows that currently the Democrats has pretty much, I think the gap has actually widened past couple of days. So it seems very likely the Democrat might win in the coming election. Now, things are still very fluid. Let's see how Trump is going to play his cards. Given the rising tension, the riots that we're seeing in US, it's not going to bode well for him. But financial market seems to be in his favor. So let's see. And crucially, I think we just have to take note that this is an election year. As we always hit into a US election year, financial markets or stock markets tends to do well. Now, I think this is in everybody's question of mine, especially off late in the past couple of weeks, we have seen a massive rally, especially in the US markets. Everybody was expecting, I would say probably if you ask me the situation probably a month earlier, everybody was just expecting probably may not be a V-shape, probably it's a U-shaped recovery. But what we are seeing in the stock market is almost pretty much like a V-shaped recovery. If you just look at Dow Jones, it's almost switching back to its February high. Same goes for S&P 500. Nasdaq is even better. You see, if you just look at it in this chart, now Nasdaq is leading the S&P 500 and Dow Jones as well as Russell 2000. Now, Nasdaq being a very tech-heavy component index, for the first time, it's actually leading 3 of the other major indices. In historically speaking, I think Nasdaq is always the one that's trailing behind. So I think off late, we can see a lot of tech-heavy counters in US is actually gaining very popular in terms of their stock prices, their share prices, and therefore actually increasing a lot of their market weightage in the index component. So it's also very surprising right now we are seeing Nasdaq leading some of the US major indices for the first time. And in fact, it's actually broke the all-time high. And it is something that we have to pay close attention to if you want to gauge how the sentiment will change in the next coming weeks or months. Now, so that's pretty much the overall global economic picture. And as the way we see it, it's a big disconnect between the stock market and pretty much the economic numbers. Whether that will continue, it's really a $1 million question. But as every rally, same goes for every downtrend. There's always room for retracements. The only question that matters is timing. So going forward into that discussion, I think the first key product which I want to highlight to you guys if you're new to trading is the FKLI or the KLCI index futures, which track very closely to your Malaysia stock index. So it's a futures contract. Just to give you a very brief overview, 1 point on the FKLI is actually 50 ringgit. It goes by half a point, index point. Now, the thing about futures contract is that you will always have consecutive forward month contracts for you to trade. So you can take a position or you can take a view on the further month contracts. So if you are very bullish in September, December period, you can actually trade the September, December contract right now. Trading sessions are a bit slightly different from the stock market. It starts a bit earlier at 8:45 for the morning session, and it ends later as well by 15 minutes. It closes at 5:15 p.m. Final trading day is the last business day of the month. It's a cash settle contract. Now, I know we are all very skeptical on the settlement basis, given the fact that we have seen how crude oil price has plunged last 2 months. So being index product, majority of the index product is actually cash settled. So you don't have to worry whether it's physically settled. Now, daily range is very important. I've been tracking the market for quite some time. We have seen a lot of volatility, especially in this front. So if you look at FKLI alone, I think if you are someone new and you want to look at the market, I think this is the best time because 25. If you just look at daily range of FKLI, it traded from 25 to 40 points on a single day. So if you are a trader who hunts for volatility, this is a very good time. So just to show you an overview of FKLI price performance since 2010 to 2020, 10 years ago, you can clearly see now the shape of recovery for our index market is very similar to the US market as well. We have went to the low of 1,002 back in mid-March, and since then we have recovered. We've almost tried to reach the high of 1,006, but we didn't. I think today we came out off late because there's some sentiments coming from the Federal Reserve, and we're just following the regional markets. So there's a bit of profit-taking activities going on. That's why we see a weakening prices. So if you just look at it in totality, the KLCI index has actually performed relatively very well. So it's pretty much trying to catch up with some of the regional peers. If you just look at the trend of KLCI for the past 3 years, it's actually been a downtrend for quite some time. Now, is this a turn of fate? It really have to depend on the current global economic conditions. So if you are trading FKLI, these are some of the factors that you have to pay close attention to. First thing, of course, is being an index market that's so tightly linked to your economic markets. So economic performance is very important. We are actually being an international market front, we are actually quite closely linked to US markets. So overseas markets like US markets has actually influence on our markets. Later on, I just want to show you a chart where it shows you, every time when there's a price change in the US markets, it does have an impact on the KLCI as well. Currency performance is another major criteria when you trades KLCI. Obviously crude oil, because given that Malaysia is a large exporter of crude oil, and crude oil being an important revenue for the economy. And last but not least, government stimulus. Government stimulus at this point in time, as what you are facing now, the pandemic crisis is actually very crucial. Definitely is going to support the market. Now, I think one of the first key relationship that we can always link with is basically the performance of Dow Jones and KLCI. So you can clearly see in this chart, Dow Jones is being highlighted in green and KLCI is highlighted in white. So you can see how closely related are they. This was traced back into 2015. Now, I just want to bring your attention to the highlighted circle. which was early 2019. If you can see closely and you observe closely, you can see there's a disconnect between the KLCI and Dow Jones. As I mentioned in the previous slide, KLCI on its own is actually on a downtrend for the past 3 years. In fact, if you look at some of the regional markets like Hang Seng or even the Kospi or even the Nikkei 225, I think only Malaysia was the only market that's been in a downtrend. But however, on the Dow Jones, it was pretty much like a bull run. Now, of course, this time around with COVID-19 into the picture, a lot of markets tanked, including Malaysia itself, but then it recovered. So the question that we need to ask ourselves is, does this relationship still hold in this current crisis? I reckon it still will hold, given the impact or given the sensitivity of nature of how US market can dictate to the rest of other markets. So I believe that the current relationship between the KLCI and Dow Jones will continue to hold, despite we're seeing a disconnect in previous years. Now, just a point of example, this just happened today. I just took a snapshot this afternoon. So if you are looking into the KLCI market or you're involved in the market, you can clearly see that towards the morning session, it was still pretty strong, pretty supportive. But as we go into the afternoon, we saw major weakness across the board, and this was actually identical to the weakness that we see in Dow Jones futures during the Asian hours. So you can clearly see how closely related both markets are. So if you are trading on the KLCI futures, you just have to pay close attention to Dow Jones as well, especially during the Asian hours. Obviously, certain times, Asian hours, being US is in the night market, there's not much news coming from US side, but like example today is definitely going to be a good opportunity, because during the Asian hours, Dow Jones futures were just at that point in time when I captured was actually down by 2%. So that caused a lot of weakness on KLCI as well. So I think these are a co-relationship that you can actually use whenever you're trading FKLI. Now, obviously I can always compare. US has 3 other major indices. You have the Nasdaq, the S&P 500. Now, as I mentioned in the earlier slide, Nasdaq is a very unique index now. It never leads the 3 other major indices. It always lag behind. Now is the time where it changes. And in fact, if you just look at the Nasdaq chart itself, we just broke the 10,000 index points for the first time. So and if you just draw that correlationship between FKLI, we can't really actually draw parallels. In fact, you look at the gap, it actually has a very big gap between the FKLI and the Nasdaq. So as a matter of fact, if you want to use Nasdaq as a comparison to FKLI performance, it's not that relevant, because Nasdaq is actually more heavy tech counters. S&P 500 could also be used whenever you compare with FKLI, because S&P 500 is pretty much a basket of all the 500 companies top 500 companies in US. Now, I just want to show you this important table, which highlights the top 5 heavily weighted stocks on the respective indices. You just look at the Dow Jones top 5, you can clearly see names like Apple, Home Depot, Microsoft, Visa. So I would say Dow Jones is pretty much mixed in terms of their basket, but just look at the weightage. Apple remains a top contender in terms of Dow Jones weightage. If you just look at the S&P 500, Microsoft is sitting there at number 1, followed by Apple, Amazon, Facebook, and Google. Now, look at Nasdaq. Again, you have the similar brands and names appearing. Now, what this goes to show is that your major tech companies, the likes of Microsoft, Apple, Amazon, Facebook, Google, they are gaining a lot of market weight. And if you just look at COVID-19 crisis during these 3 months, we have seen their weightage in the index grow wider, which tells you why Nasdaq has been performing very well. Now, it's crucial to watch these 5 major, or rather majority of the US top tech companies. We don't see any chance of big retracement, but we probably will see price softening. But they will continue their bullish run, because if you just look at this pandemic crisis, these are the companies that's actually benefiting from this crisis. Just look at share price alone. I think a lot of them has actually reached an all-time high. So that explains why Nasdaq has been actually performing very well. And if you just look at weightage itself on each respective stocks on their individual component, it has a heavy weightage. So if you want to track how the S&P 500 is going to perform, how the Dow Jones is going to perform, just track the performance of these top 5 companies. Now, coming on to the Malaysia domestic front, I think obviously economic performance plays an important role. I think you just look at some of the economic reports as you are seeing. Crucially, I think our central bank, Bank Negara, has been very responsive in terms of cutting rates. In fact, a lot of consensus in town is thinking of another rate cut in either probably in the July meeting or even in September meeting. We're not sure yet. But whenever there's a rate cut, usually that's very supportive for the market. It actually encourages lending. Now, I think crucially, Malaysia fundamentals looks very similar like the regional markets. Obviously, we're also very tightly linked to crude oil. But I think importantly, as a trader, we always want to look at when are the key dates, key report release. Anything that's out of consensus, anything that's out of market expectation is going to have an impact on the market. So central banks meeting, Bank Negara meeting is something that we have to closely watch out for, or even reports like trade balances, which is due to release by DOS, Department of Statistics. Those are also key reports that we also need to watch out for. It does have an impact on the market. Now, since I mentioned on Dow Jones and Nasdaq and S&P 500 components, it's also worth mentioning what are KLCI components. Unfortunately, I think this was outdated before there's a shift in terms of the components that's being listed and delisted from the KLCI components. But I just want to bring your attention to the weightage of the respective stocks itself. So if you can see, based on end April 2020, you can see public bank sits on the top in terms of the weightage of the total index, followed by Tenaga, followed by Maybank, and followed by CMB. So you can clearly see in the KLCI index itself, financial markets or financial stocks has relatively a strong weightage in terms of the index performance. So if you want to track or you want to gauge how the index will perform, you just have to look at the respectively individual of these counters, the bank counters itself. Now, just to share with you in terms of relationship, this is just to measure the relationship strength that we are seeing in terms of comparing bank stocks with the KLCI performance. Based on a 5 years data, we can clearly see public bank, Maybank, or even CMB has very strong linkage of on KLCI performance. Obviously, I think of late Top Growth, being a very hot stock, and I think the weightage is also increasing. It does also have an influence on the KLCI market as well. So if you are trading on a KLCI market, FKLI, you really need to look at some of these banking stocks itself, because it does have heavy weightage on the index and it will impact on the market. Now, as I mentioned, another factor is this government stimulus. This is an important factor which normally during time of crisis, we have to pay more close attention to, because that's where government will actually step into the market and really give confidence to the market participants. So we can clearly see the government has actually recently launched 2 stimulus packages. One is Bantuan Prihatin and one Bantuan Penjana. You can clearly see market take it in a very good mood. It's trying to elevate some of the impact from COVID-19. So I think government stimulus is something that we as a trader we also have to be very mindful of. It does form how you're going to see the market in the midterm, and always review it as a very positive measure. Now, coming to another important relationship, which is the FKLI index against the ringgit. Ringgit as an important currency in Malaysia. So when you can clearly see whenever ringgit weakens, stocks performance usually don't go well, because that's where foreign outflows will start increasing. As foreigners will dump more ringgit into the onshore market. Now, there's also a period of time where actually weaker ringgit is beneficial for the market. We have seen that in certain periods, especially when weaker ringgit, some foreigners may think that valuations in Malaysia is cheap, it's attractive, and given the ringgit depreciation, maybe it's attractive for them to buy. But for those foreigners who are holding on the ringgit basis, ringgit performance plays a very important role. So when you have a weaker ringgit, technically they are actually losing out on their investments. So technically you'll see an outflow coming up from those spaces. So ringgit does have an impact. If you compare some of the factors I just mentioned, ringgit may not hold such an important factor. It still boils down to your individual stock respective performance as well as overseas market. But it's important for us to capture this in mind as we trade in the market to gauge on how ringgit performance is going to be. Crude oil is definitely an important parameter, especially when you're trading FKLI, because Malaysia, being a very export-oriented crude oil market, crude oil is a major revenue for the economy. So whenever you see a lower crude oil prices, it's definitely not good for the economy. As we see the past couple of months, we've seen the sharp plunge in crude oil prices. In fact, it went to negative territory for the first time. I don't think that will bode well for financial markets. Now, if you look at the chart closely, you can see that both the crude oil price and the KLCI index price are very closely linked. So if you are trading on the KLCI, you probably could use crude oil as a basis for you to interpret the relationship. Now, as I mentioned earlier on the webinar outline, seasonality is an important parameter. If you are trading on the indices, seasonality may not have much greater impact compared to commodities, which does tend to show a very similar pattern, but eventually it still can be used as a gauge. Now, here, sorry about the numbers a bit blur because I just took it from a snapshot. So it's just be mindful of the colors of the boxes. Now, green boxes indicate month-to-month positive. So I've actually break it down from January to December. And red boxes are actually indicating month-to-month negative. Now, if you look at May, the common notion where people say sell in May and go away. Now, that notion may not really hold in FKLI. In fact, it's actually, look at the month of May, we pretty much have quite a lot of green boxes compared to red boxes. So it is something that is worth paying attention to. Now, if you want to know which particular month is strong for the FKLI, just look at December itself. Out of 20 years that I computed here, there's only 4 years out of 20 years that's actually on the ended red, but the rest of the years it ended positively. So if you are someone in the futures market, probably you can even long a December contract when you think it's attractive. And I think other months like February and March is also very positive. Even January as well. That's where the common notion is the January effect comes into play. Now, crucially, look at June. June itself has always been fairly positive. I think we have more positive rather than negative. So let's see. We still got another 3 more trading weeks. How June is going to end on a monthly basis. Now, crucially, as we enter into July and August, this is where things may start to look a bit different. August and September are usually weak periods. Probably that's because second and third quarter, some of the key component stocks usually they have a weaker seasonal profit or seasonal trend. So I think that will have an impact on KLCI. So do watch out on this space. Crucial to watch is August and September. In fact, July is also very crucial. Despite we are seeing historically, July also could be a very positive month. But again, I think things will start to change. Things will start to get very fluid as we see greater developments on the global front as well as on the COVID crisis. Now, sorry to sound a bit technical here, but I just want to bring your attention to the futures. We call it basis. Basis is comparing the futures price and your spot price. Spot price here refers to your KLCI index price. So there's always a difference. Obviously, in the perfect world of markets, they shouldn't have a difference because ultimately the futures index, the underlying is still the KLCI index. But then again, markets, there's certain rule of imperfections. There's always a certain degree of information that we may not have. So there's always a discrepancy. Now, it's very crucial if you are currently trading in the market, perhaps you probably have seen this or probably have observed such a pattern, especially on the discrepancy part. Now, just a common notation, whenever your futures market is higher than your index market, we usually refer to as a premium market. Now, this usually happens when the market is actually anticipating on a very strong uptrend, and usually happens on a bull run. Now, if we are seeing the FKLI or the futures market is trading lower than your cash market or your spot market or your index market, we usually refer that as a discount market. Of late, if you just look at it, the futures market has been actually very bullish. Until today, it has actually reversed. I think just now the numbers before the market closed, the futures market was actually trading lower than the cash market by about 10 points. So it's actually a discount market. So crucial to watch. I think if you are someone that is new to the market, it's good for you to observe such a behavior, such relationship, because it tells you a picture on how market sentiments behave going forward. So that's pretty much on FKLI, the KLCI index futures. Next, I'll move on to another key product on Bursa Malaysia derivatives, which is the crude palm oil. I think everyone is very familiar. Malaysia is a key market for palm oil, especially in terms of production. Now, just to go to contract specs, but futures contract goes on a very standardized and regular contract. Each contract is actually for 25 metric tons. Just for information, 25 metric tons is a lot. It's almost it's like a full tank of a full lorry tank, that palm oil. That's for one contract. We always monitor price fluctuation in palm oil by every ringgit movement. And if you are trading on the palm oil market, that's a lot of contract months for you. It's up to 36 months. So it's indeed a very liquid and very wide market depth. So, if you want to take a view 6 months forward or a year forward, you can be in position right now because there's contract available for you for next year onwards. So I think there's something CPO has been a very liquid market, has been a very in-depth market. It gives a lot of opportunity for all types of participants to participate in the market. Now, trading hours are slightly different. Morning is slightly different from FKLI. It starts at 10:30 to 12:30 and 2:30 to 6 o'clock. Okay, so slightly later than FKLI, and it starts slightly later than FKLI as well. So the key thing which I want to highlight is, it's actually a physically settled contract. I believe, Phillip Futures do encourage the clients to close out contracts before the due date. The due date is every 15th of the month, but I think 2 weeks prior or 3 weeks prior, usually they will advise customers accordingly. But if you are new to the futures contract, if you are new to CPO, do take note that it's a physically settled contract. Daily range is attractive. It's 70 to 100 points. Again, we are coming to a very volatile session in terms of CPO. Like today itself, the range itself is about 90 points or close to 100 points. So you can clearly see the volatility in the market. So if you are someone new to the market, again, I like to emphasize it's actually an opportune time if you're searching for volatility to trade with. Just to share with you the overview of crude palm oil price for the past 10 years. So we can clearly see we have reached the peak of 3,002 just late of last year, and came the COVID-19 crisis. It plunged down from 3,002 right down to 1,950, those levels. And from then on, we have seen a rebound as China, a major demand for palm oil has started to reopen the economy. So I think again, you can see a very big upswing and a downswing in a just matter of 6 months. It actually gives you a lot of volatility. Now, just to share with you some of the factors that's actually influenced FCPO price, definitely supply and demand dynamics is very important. Weather is very crucial for any type of commodities. Weather is not only for palm oil. If you're trading on corn or soybean, it also has an impact. Weather is very crucial. Ringgit is again another important parameter. So if you are trading on CPO, also do watch out on the ringgit performance as well. Same goes for FKLI. Government policies again is another important variable which we need to pay close attention to. Soybean, an alternative product to palm oil, has actually close linkage to palm oil prices, which I'm going to share with you later on. And last but not least, biodiesel. Now, biodiesel, palm oil is used as a biofuel, which means that palm oil can also be used as an alternative energy. They use it to blend your crude oil to be used as a fuel oil. So let's jump into the supply and demand dynamics. So first thing we always look into supply situation in the country. Now, trading palm oil, if you want to get data, is very resourceful. You can always go to MPOB website. You get all the data there. As it is actually dated at least 10 years. So if you are someone that loves data crunching, you can actually crunch those numbers. But I just make it easy. I just show you in the chart. This is the past 10 years trend of CPO production from January to December. So you can clearly see production will start to rise around March and April. And it goes all the way right until August or September. And from September onwards, especially when you enter into October, the last quarter of the year, you can always see the trend starts to come down. And that is crucial. So if you are looking at prices, when you have high production period, prices will not be good. But when you are entering to a low production season, usually to the final quarter of the year, where production tend to decline, usually prices will be good. So you have to time yourself. If you want to have a biased view of the market, you have to look at the seasonality pattern of production. So currently, if you just look at, just to compare 2020, despite the COVID-19 crisis, the 2020 production trend seems to be in line with seasonal. I think therefore, if you just look at May, June, July, May numbers, which was published by yesterday's MPOB report, it shows an uptrend in production, which is actually in line with seasonal. So we are expecting this production to continue to rise, especially for June, July, and probably may peak in August or September. But this can change, again, depending on weather. So, if you just look at supply dynamics this year, I think 2020 may be slightly, in terms of total production, maybe slightly higher than last year. Although I know many estimates are saying that given the MCO, it should have an impact on the market. But my personal belief is that I think as we have trying to recover and reopen the economy, production will resume. But I think there's one space that we need to watch out, especially for this year, if you want to gauge the palm oil production, is how the labor dynamics is going to play out. So we have seen a lot of labor issues of late. Actually, that will have an impact on production. But if labor can be resolved, I still reckon that 2020 is going to be higher production. So prices don't have much room to rise. Now, just to show you, I think Malaysia palm oil is a very important commodity. I just chart here basically the total acreage, planted acreage for palm oil, both Malaysia and Indonesia. So you can clearly see since the beginning of 2000, we have seen Malaysia acreage to start to slow down, but Indonesia has started expanding rapidly. And it was a massive expansion back in 2010. Of course, of late, Indonesia government also has started to slow down. I think there's a lot of complaint on deforestation. So there's also imposed a moratorium on new planting in Indonesia. So I think both Indonesia and Malaysia production in the next couple of years will actually start to slow down. So if you're someone that's looking into the longer term perspective of palm oil, we're going to face a shorter, probably, we might, in years to come, we might face lower production all in all, given the fact that we actually have maturing level or maturing growth in terms of acreage. So this is something to watch out for in the medium term basis, and mid-term basis. Here I refers to years, not months or weeks. Now, another key variable which we need to watch out for, besides supply, besides production, is stocks. Stocks levels is crucial. When you have high stocks levels in a country, usually prices is very low. But when you have low stocks in a country, usually you have very strong prices. Now, I think back in 2019, we has hit the highest inventory on record, above 3 million tons. And if you just look at the prices back then, I think it went to as low as almost touching below 1,009 ringgit per ton. So crucially to watch is this space. Obviously, with good demand, lower supply, stocks comes down, it's good for a price. But if you just look at stocks this year, it seems to be fairly well. It's just roughly above the 2 million tons. If it stays that way, probably prices will be very supportive. So if you are someone that's trading in the market, you need to really know the stock situation in the country because it does have an impact on the market. Now, just to show you the relationship between the stocks level and the CPO price. So your stocks level is highlighted in white color, and your stocks level is highlighted in yellow color. So you can clearly see whenever you have high stock situation, your price goes down, and vice versa. So, crucial to watch every time an MPOB report comes out is what is the stock level, and is it with consensus or not with consensus. If it's above consensus, definitely going to expect price to be lower. But if it's below consensus, then usually we expect a rally in price. So crucially for you to watch if you're trading on the palm oil market is to see the overall stock levels in the country. Then obviously there's a supply picture. Then now covering on a demand perspective, the export trend is also crucial. This year has not been very well. We started off quite okay, but when we were hit by COVID-19 crisis back in February and March, and it extend towards the April and even May onwards, we start to see export trends start to decline. But I think numbers of late in the past couple of weeks has actually shown positive sign. So hopefully there's a recovery, and actually that translate into the recovery in prices as well. So let's see whether export can continue to stay where it is, can continue its positive growth. It is something to watch. But do notice the past 5-year trends in terms of exports. Again, it's very similar to production. We reach a peak around July, August. Then around October onwards, towards the last quarter, we see slower demand especially coming from China, because China will actually go into a winter season. They will demand less of palm oil. So breaking it down into respective individual countries, this is just to show you China demand for palm oil. So you can't really see much of a pattern, but what I want to highlight is the year 2020 has been quite a slow growth in terms of China demand. This is partly because of the COVID-19. A lot of major cities in China has been locked down back in early early February. So we do see a plunge in terms of China demand, but I think of late numbers, things are starting to pick up. We see higher numbers. Hopefully China will start to restock its supplies, and probably in the next couple of weeks we will see higher demand. So if you're someone that's watching the market, do pay close attention to China demand as well as India demand going forward. So just to indicate why I'm saying that China might purchase more in coming weeks is because if you just look at palm oil stocks in China, currently you can clearly see the current levels are below the 5 years average. So which indicate that stocks in China is actually very low for palm. And going forward, they need to restock. So with attractive prices and with continuing demand, in fact, a lot of cities in China are starting to reopen, demand will start to pick up. So hopefully we can see that will translate into better export numbers, and that will try to support prices going forward. Okay, so here goes to show again, I think palm oil is always a major commodity in terms of edible oil markets. So China has been always a major factor for both the Malaysia and the Indonesia palm oil scene. So if you want to track how demand of palm oil is, you just have to look at China. Now, going into the next big buyer of palm oil, which is India. Now, India has been very interesting story, has been very fascinating. We start off early of the year. If you just look at 2020 numbers, the total demand from India has actually plunged by close to 70%. It was a massive drop. Obviously, you have the ongoing political row between India and Malaysia earlier part of the year, but that was then resolved. But if you just look at the numbers, it's still not picking up yet. I think, in fact, there's a couple of news coming from India just this week alone. They're saying that probably they will increase more tax on, import tax on palm oil, which is not positive news at all. But no, India has not. If you just look at the average numbers this year alone on monthly basis, those numbers are just far off from their average. So it's very crucial to watch this space. I still reckon if you just look at numbers alone, India is definitely going to go into deficit. India is starting to reopen its economy, although there's sign of second wave, probably they might try to do a lockdown, but they're not sure yet. But the stocks of edible oil at the port is way too low, and probably they may not have enough. And I still reckon the situation is, they probably might buy more palm oil going forward. So this is again a very important development which we need to pay close attention to. And tax situation in India is always very volatile, and that will actually have impact on prices. So if you're someone that's trading in the market, you just need to be very careful of especially on the developments on India tax front, because that will probably have an impact on the market. Now, weather, just to disclaim here, I'm not a weatherman, and weather is a very hard to predict. Even the best forecasting weather model nowadays, I think they kind of get it wrong as well. But weather has a very huge impact on palm, and especially two major weather phenomena, the El Nino and La Nina. El Nino are the weather phenomena which you need to pay close attention to, because those are associated with dry weather. So if you just look at those numbers, so anything that's positive, usually, you just look at the table, anything that's positive in number indicates very dry weather conditions. And usually in blue numbers are indicating very wet weather conditions. We are very worried and concerned about dry weather conditions. So if you just look at year 2015, it has been, I think, on record, one of the driest weather we have ever faced in Southeast Asia. So therefore, actually, it translates into very high price rally in terms of CPO. For those who are trading in the market, probably have seen it. So I think weather has been very important parameter. So this table is actually based on ONI. I don't go too deep on the technicals, but just beware that weather phenomena does have an impact on the market. So this is back in 2015 when we have a severe El Nino. So prices rally from low of 2000, it went up to as high as 2006 in a span of 3 months. So that shows how weather has an impact on the market. And we are very particularly concerned on the dry weather condition. Wet weather conditions are not that particular concern because it has actually a lesser impact in terms of prices. Now, next, I think government policy is crucial. Like how India tax has an impact on market. Whatever Malaysia government announces as a policy for the market, it also has an impact. So this was captured, I think, a couple of days ago when our Prime Minister announced the stimulus package. It also involved the palm oil market as well. I think part of the package was that we will extend the zero waiver export tax for the rest of the year. So that was actually very positive. So during that announcement, when it was announced, we can see a sharp rise of price. I think it was close to 60 ringgit at a point in time. So I think this government's policy or government measures is something that for us to watch out for. Of course, we can't predict, but as a trader, we just have to be very mindful of. Now, I just want to highlight one of the important intercommodity relationship, which is the palm oil and soybean oil. Now, soybean oil is always an alternative to palm, even for China as a big importer. If they can't demand much of palm oil, they always look at soybean oil. But the major commodity for China is always soybean, because they need it to feed the hogs. They need it for nutritional. They need it for food. So they need to crush those soybeans to get a meal, and oil is just a substitute. Now, obviously, there is a relationship between soybean and palm oil, given that the fact that soybean oil is an alternative product. I just want to share with you the price relationship between both the products. Historically speaking, when you look at the price spread between both products, it has been trading around the $100 range for quite some time. So historically speaking, the $100 range is technically the historical mean. If you are someone that believes in mean reversion, every time when it goes above, you are just anticipating that it will revert back to its long-term average. I just want to highlight the circle area in yellow are those areas where the spread goes negative. Now, what do you mean by the spread goes negative? A spread goes negative indicates that the soybean oil is much cheaper compared to palm oil, or rather palm oil is more expensive compared to soybean oil. And if that happens, it's very rare, because if you just look at the chart, every time it happens, it goes to negative, it's only a short period of time. And usually that happens when palm oil is relatively more expensive. So if you are a trader that's watching very closely on this spread, you can take a position whereby you can short palm oil and you can long the bean oil spread. Whether this is offered, perhaps you can keep in touch with Phillip Futures. Perhaps they can tell you more about the product itself. But I just want to bring your attention to the spread, especially when it goes negative. So it's a relationship that is, traders always pay close attention to, and in particular, whenever the spread goes negative. Now, ringgit and another important parameter whenever we trade FCPO, because a weaker ringgit always beneficial for palm oil price. For the simple fact that weaker ringgit encourage buyers from India and China to purchase more, because weaker ringgit they can buy more quantity. But when you have a stronger ringgit, vice versa, they'll demand less of your palm. So you're clearly seen in the chart, whenever you have a stronger ringgit, you tend to followed by weaker palm oil price. So ringgit has a very fundamental relationship to palm oil price, and it is something that we need to pay close attention to as well. Now, I also mentioned CPO and biofuel, and in this chart I showed to you the spread again between both the products, the palm oil price and what we call in the market convention the gas oil price, and there's a spread to it. Now, when the spread goes positively, that means crude oil price is relatively, or rather palm oil price is relatively more expensive. And when it goes negatively, it means palm oil price is relatively cheaper compared to crude oil. Now, obviously, as a bio refinery, if you are doing a biofuel business, we want a higher crude oil price, because for us to have a low crude oil price environment, there's no incentive for me to convert some of the crude oil or to blend some of the crude oil with palm oil. So I think this is an equation that we need to take into account. So crude oil is a fundamental support for the palm oil price. So when we are facing a low price environment, a low crude oil price environment, we don't usually foresee palm oil demand, especially for the biofuel segment, to be strong. So that's why we are seeing in the past couple of months, we see the deep plunge in terms of crude oil price. So actually, we don't see much of biofuel demand. In fact, Indonesia, as a very big biofuel producer and biofuel demand, in fact, I think they're still struggling to try to fulfill the overall total year demand, because the sharp plunge in crude oil price just collapsed the biofuel demand. So if you're someone that's trading on this space, the FCPO space, you also need to watch out on the crude oil developments, because it does have an impact on the market. Again, I think as I mentioned earlier, seasonality has a very important play whenever you trade commodities. Yes, less relevance when trading indices, because indices goes in trend, but commodities goes in cycle. Now, if you just look at the palm oil cycle in terms of price, again, here is a 20-year cycles from January to December. So again, I break down into boxes. Apologies if you cannot see the numbers, but I just want to bring your attention to the colors. So you can clearly see May, June, July are usually are very weak periods for palm. In fact, August or September as well. If you coincide this table and you coincide with the production trend, it's actually pretty much in line, which means that when you have high production period, as we are entering into high production period, it usually coincides with weaker prices. Now, I want to bring your attention to the fourth quarter of the year, the October, November, December. Notice that October, November, December periods, we always have stronger prices, especially December. Out of 20 years, we only have 3 years that's in negative month to month, but the rest of the years is always positive. So notice that as we go to the last quarter of the year, production starts to slow down. Normally, we see stronger prices. So if you are trading on the palm oil market, this is what we call a seasonal trend. You can take advantage of it. You can long a December contract or even short July or August or September contracts. So seasonality does have an impact on the market. CPO has a trend in terms of the production trend, and it's actually in line with the price trend as well. Now, I think this could be quite technical for someone who's new to the market. So basically we are plotting, as I mentioned in the contract specs earlier, palm oil has always a forward contract. It has up to 36 contract months, so it's up to 3 years. if we plot those prices, each respective month prices into a chart, you will get this chart here that show it to you. Now, if farm prices are lower than your current month prices, what we term it in our market is a backwardation market. Okay, and if farm prices are higher than your current month prices, this is what we call in our market convention a contango market. Now, if farm prices are higher than our current prices, that indicate that the current scenario in the market is actually bearish, because farm prices are higher than the current month. But vice versa, if your farm prices is lower than your current month, this indicates that the market is actually very bullish. The current market is actually very bullish because the current price is higher than the next couple of months. So it's very important for us to understand these dynamics, because forward prices will tell you what are the market sentiments telling you. Is it going to be a bullish market or is it going to be a bearish market? Now, I captured this probably a week ago. So you can see forward prices are actually trading lower than your current prices. So indicating that the market currently is actually pretty bullish. But will that curve change? Yes, it will. If the market scenario has changed from a bullish to a bearish scenario, the forward curve will change as well. Now, if you get a bit lost here, or it gets a bit technical, do not mind whether it's a contango or backwardation market, but pay close attention to the behaviors of your forward contracts, because that will tell you how the sentiment of the market is. You don't want to be going too bullish on the market when all farmland prices are actually coming down. So this is I would say an added observation if you are trading in the FCPO market. So I'm just going to share with you simple trading steps to trade FKLI and FCPO. I just want to put a disclaimer here. If you are currently trading in the market, if you have a strategy that works for you, just continue to use it. Now, if you are someone new to the market, you want to start exploring to trade FKLI and FCPO, perhaps you can use these simple steps and start using it and start to build on it. I've been trading this market for quite some time. Market is always dynamic. There's no fixed strategy that can really give you the fixed outcome, because market varies time to time. So your strategy has to vary time to time. But what I'm sharing you right now is just to give you a fundamental building block for you to build your strategy upon to. So again, as a trader, if you are thinking on to do this on a continuous basis, you have to keep continuing to improvise your strategy. Okay, so first step always is identifying a trend. Trend is always identify whether you have a higher high and higher low, and that usually indicates an uptrend. If you have a lower high and lower low, that usually indicates a downtrend. So it's actually very simple. And there's always a common saying, trend is your friend. So never try to fight against a trend, because it just gets tough. Always try to ride along with the trend. So just to show you an example, this is on FKLI. You can clearly see those highlighted yellow circles are indicating you lower low and lower highs. It's actually on a downtrend. Now the blue circles are indicating a higher high and a higher low, and that indicates an uptrend. So identifying the trend is important, and that's a first major step for you to create your technical setup. Now this is for FCPO. So you can clearly see there's a lower low and lower high. It's clearly on a downtrend. And importantly is for you to recognize the trend itself. So with one glimpse, you should be able to recognize whether the trend is on the uptrend or the downtrend. Now, next, once you identify a trend, it's important for you to incorporate indicators. Now, there's a lot of theories, there's various methodology outside. Every traders will have different type of methodology. I keep it simple. I always use moving average. Again, moving average as an indicator has various type of moving averages. You have the exponential, you have many other types weighted moving average. But here I'm just simply referring to the simple arithmetic moving average or the simple moving average. So moving average basically takes into account your average price for the past couple of days, depending on the factor that you put in. So I'm always using the 9 and the 20 factor, the 9 days and the 20 days MA to incorporate into the trend. So how to use this is simple. The 9 days is to indicate a faster or shorter day averages. The 20 days is a longer term averages. So if you can see that, if the 9 days with the shorter day averages crosses from below above the higher time average, usually indicates a bullish trend, and vice versa. If it cuts from above, usually indicates a downtrend. Okay, so if you just look at here, in this chart, you can clearly see the red line indicates a 9 days moving average. The green line indicates a 20 days moving average. So if the red line crosses from below, indicates a bullish trend, and vice versa. If it cuts from above, indicates a bearish trend. So example on FKLI, again the same principle holds. Anything if the shorter term moving average cuts from above, from below, sorry, it usually indicates a bullish trend. And notice that the candles usually touches the 20 days MA and it rebounded. So that indicates the trend still holds, and if you have holding a long position, the trends can continue. Now, so I have first identified a trend. I've incorporated a moving average. Third technical indicator which I often use is the Heikin-Ashi candlestick charts. Now, I think Heikin-Ashi is commonly available on most charting platform. Heikin-Ashi is slightly different from normal candlestick charts because it takes the average of the candlestick charts. So the way you interpret is also slightly different from candlestick charts. I'll show you the reason why I use Heikin-Ashi instead of candlestick charts later on. So notice this, whenever you see a green bar and notice that there's no gaps, it actually covered or average up the gaps from a normal candlesticks pattern. So if you use a Heikin-Ashi candlesticks, you can always see the colored bars. Now, in a green bar, if you see a green bar, usually indicates you a bullish trend. If you see a red bar, indicates you a bearish trend. You can see the circles accordingly. Now, I'm comparing here the Heikin-Ashi and candlesticks. Notice that in candlesticks chart, you can see a lot of gaps. Now, if you are someone that did a lot of analysis on gap trading, it might be beneficial for you. But if you just want a trading setup that is simple enough for you to make a decision, because candlesticks can get quite complicated whenever you have a lot of candlestick formation, whether it's a piercing star or bullish harami or whatnot, the common candlesticks pattern, it tend to confuse you sometimes. So I just want to keep it clean and simple. Therefore, I use the average of the candlesticks. I use the Heikin-Ashi, and I couple that with your MAs. I think pretty much that will give you a setup. The reason I chose Heikin-Ashi because it actually tried to average up the candles and make it easier for me to identify whether it's still a bullish or it's a bearish trend. So Heikin-Ashi, this is an FCPO example. Again, I like to highlight, normally if it's trading on the range, you have a mix of red bar and a green bar, normally it's a period of consolidation. When you see subsequent candles, like during an uptrend, which is all green bars, subsequent candles are all green bars, there's usually a buy signal. Same goes vice versa. If you usually see subsequent candles are in the red bar, those are usually the sell signals. So, and mind you, we also incorporate the 9 days and 20 days MA in the setup for us to better identify which is a trading opportunity, and also the position for us to enter and exit. So this is on FKLI as well. Now notice that candles tend to test the crucial moving averages line. So it tested the 20 days MA and actually rebounded. Now this could, if you are trading on a very tight time frame, you do notice that these are sometimes the trades that can break you out of the trend. But you just have to have a longer perspective on how you see the overall trend is going to be. But you just look at it, I think the major uptrend is still intact. Obviously, I think today dynamics has changed the game. So crucial to watch if you're looking at the market. The weekly market close for this week is very important for us to determine the trend for next week. So that's pretty much on technical setups. Last but not least, in order to have a complete trading plan, you must always have risk management. Now, in risk management, I also use an indicator which I use the average true range, which is the ATR. So it measures what is your daily high and low. So as I mentioned earlier in the slides, CPO daily range is about 70 to 100 points daily. FKLI is about 25 points to 30 points daily. So if you are adjusting, if you want to enter a trade, you must enter with a risk reward ratio. So if you enter with a 2-to-1 risk to reward ratio, so if it's 25 points daily range on FKLI, you must be prepared to set a 25 points stop loss. No, obviously with a view of 50 points profit. Okay, so just a sample of setup. No, if you just look at the trend, it's actually very bullish. So you want to aim to long at 2320, which is the current price. And I just shared with you the trading range on this time frame. Just to, by the way, ATR as an indicator, it does change according to time frame. So in this time frame, it's actually on the 30-minute time frame, and the daily range on the the range on the 30-minute time frame is really about 17 to 25 points. So assuming it's 25 points, if you aim to long at 2320, you must be prepared to cut, anything 25 points below your entry point. Now, obviously, you are aiming a 50 points profit. So this is how we work out ATR as a risk management tool. Okay, so example as trade setup, you can clearly see MAs are indicating a sell, where the 9 days MA is cutting from above. You can see Heiken SG bars are red. So obviously it's a sell signal, and you adjust your ATR accordingly. You have a 14 points ATR on a 30 minutes time frame. So you should position a sell at this price. The loss position is 14 points above. That's your cut loss position. So that's how you actually do a complete trade management, including the risk management setup. Last but not least, trading record is essential. Obviously, as you start your journey in trading record is a must. Despite the hassle, despite being very tedious, you need it, because there's times and periods where you just have to go back to your trades, just have to look at it, especially on your winning trades. What have you done right? And especially on losing trades, what have you done wrong? Make sure you don't repeat those mistakes again. So always important for you to remark and to have a trade summary. So coming to the end part of the webinar, I'm just going to share with you on the price outlook of where I see palm oil is going to go. Now current price, we are looking at 2003 to 2004. It's been that range for the past couple of days. I still reckon if you just look at the fundamentals, July, August, going forward, you see higher demand coming from China. Or obviously we got higher production, but MPOB numbers last 2 days was actually quite okay. Important to watch next month whether the stock figures will continue to rise. If continue to rise, I think that will be a dampener on price. But I think throughout the year, I still see 2,700 key crucial resistance to be tested again. It's a matter of timing. I still reckon that towards as we hit the third and fourth quarter to the end of the year, where we are facing lower production, we should see higher prices. And 2007 as a critical resistance, it could be tested again. Now, again, I think it's going to be a very volatile period. Now people are talking about a second wave. It's going to have an impact on demand. So again, I think if you're looking on a downside basis, 2001 has been very crucial support for quite some time. I don't think that will be tested again this time round. But who knows, if the crisis gets the second wave kicks in, and demand pictures start to be in a weaker basis again, then probably we might see it test again the 2,100 level again. So crucially, I think these are the price levels I'm looking at for this year. Averagely, I'm still looking at about 2004 for the rest of the year. In fact, it's slightly better than I think slightly not too bad from last year's average. But if you compare to 2018 and 2017, we are a bit better off. Now FKLI is a bit tricky. You can see the very sharp recovery. We see a sharp dive and sharp recovery. Key thing to watch, 1,600 is psychological resistance. It's a round numbers that's actually giving a lot of resistance to the market. Will we cross that again? It's all depending on how the US market is going to perform. Now, based on today's action, it's crucial for the fact that we only left one more day to the weekly close for this week. If you just look at the weekly candles for the US markets, in fact, it's actually on the red candle bar. We have seen 3 weeks of subsequent rally. Will this week be the week where we face exhaustion in this bull run? If indeed it is, then next week we probably could see some exhaustion, some bit of short-term pickage in terms of the bull run they were saying. So next week is very crucial. So I think let's look at tomorrow's close. If tomorrow close is probably weaker than what you are seeing today, then probably we ended the week with a red bar for most of the major markets, including FKY as well. And next week is crucial because that is a red flag. So on a weekly basis, if you are saying that this week is probably going to have a lower week close, then next week is likely to extend the weakness as well. So if it does, FKY does extend the weakness, 1,500 is definitely going to be tested again. I still reckon the index to be quite supportive in the midterm, given the fact that you look at US markets, it still wants to go on a bull run, despite, you look at how Federal Reserve have been trying to pump prime the economy. So I mean, these are some of the key crucial resistance and support level. And I still reckon Dow could have a leg of room to grow until the November election. Thereafter, it's anybody's guess. Now let's see, because US has been on a bullish run again. To reiterate, it's been an election year, and most election years is always positive for the stock market. So I think that's cover majority of what I want to cover in today's webinar. And obviously, if you are someone new to the market, I would say it's a good time for you to start your trading journey in the market, especially for FKLI and FCPO. Obviously, if you have not opened an account, you can always open an account. You can keep in touch with Phillip Futures. They can tell you more. And really, if you want to start this as your trading journey, you really have to take it as your own business. And as any setups, you always need a plan. If you fail to plan, then that's it. And whatever strategy I shared with you today, even though it's simple, you can always backtest it. Regardless of, even you want to improvise from what I've just shared earlier, make sure you backtest it. Obviously, you'll face disadvantage every time when you backtest. You'll face a problem, what we call curve fitting. But that's all right. At least it gives you an indication on what's your percentage of your win and loss basis, and from there on you build upon. Trading is all about consistency, so be consistent and be disciplined. It is something that one's need, especially when you're going into a full-time trading venture. So conclusion, I think have a trade plan at minimum. If you don't have a trading plan right now, please go and have one. Trading is a persistent journey. Is everlasting. Okay. It's not an easy journey, I would say, but I think you look at volatility in the market, it's very tempting. So if you are someone, whether you're a swing or whether you are an intraday trader, you love the volatility, because without volatility, sometimes it's very difficult for you to trade. So volatility is back, whether it's in financial markets, whether it's in commodities, those volatility is back. So I think the best time to trade is now. Now, when it comes to perspective on the market, if you ask me honestly, I would prefer to look at the cup half full. No, a lot of people are saying, probably the third and fourth quarter we should see a rapid recovery. The curveball that I'm seeing right now is the pandemic and the US election. How that will play out, really it depends. So I still see the probably next 2 months or 3 months or so, we're going to see major volatility in the market. So as a trader, I'm more concerned about volatility. The trend of market is secondary. So if you want to take trading as a serious business, you have to do it on a full-time basis. With that, I'm going to pause here for a minute for the Q&A. If you have any questions on the Q&A basis, please type in the Q&A box. I'm going to end it with a quote. The goal of a successful trader is to make the best trades. Actually, money is secondary. Reason being is this is quoted by Alexander Elder. Reason being is because if you trade according to your plan, even if it's a losing trade, you just have to improvise your plan. The key thing is that you follow your plan. No, you cannot be trading blindly, and you cannot be trading very recklessly without a plan, because eventually you will fail. So I think take this great advice from Alexander Elder. He's a great trader. If you keen to know about him, you're keen to read his books, it's available on the internet. So I'm just going to pause here for a minute for the questions for the Q&A, and I'm going to hand it over to Vincent.
All right, thank you, David. Okay, so if you have any question, please type in the question box. Okay, so there's a question here, David. What are the parameters for the Haken SG for you to use?
Okay, that's actually a very good question. Now you can really go in depth into Haken SG candlestick study. But I think the standard function itself is good enough. It's really taking the average of your normal candlesticks. It's basically there's a formula to it. You can play around with the formula. I don't encourage it. Because that will actually ruin the colored bars formation. So stick with the standard formula, unless you really delve deep into it, be it in the product and you are very familiar with Haken SG, uh, whereby you can actually tweak the formula, then I encourage it. If not, I think you should just use the standard formula that's given.
Okay, thank you, David. All right. All right. Due to the time extreme, so I will end our webinar today. All right. Thank you, David. Okay. So, okay, if you have any question, you can email to us. Okay. So here is our contact details. Okay, and you can. This is our account opening QR code. Okay, so after this webinar, and we will post our webinar in the YouTube, so you guys can go to find the YouTubes and subscribe our channel. Okay, so that's all for our webinar today. Thank you, David, for your sharing. If you have any, please fill out the feedback forms and hope you enjoy this webinar and today webinar have shared some things. Okay, good night and bye.
Okay, thank you, Vincent. Take care.
Okay, thank you, David. Bye.